Metair manufactures and supplies motor vehicle components for the original equipment or OEM market in South Africa, Eastern Europe.
Exactly, and it's got a specific focus on batteries. Remember, it bought that Turkish company called Mutlu Akku, which has gotten itself more significantly into the battery market in Europe. Quite a sizable player, interesting company.
6.3 billion rand, nothing to sneeze about. A PE ratio of 10.8, dividend yield here of 2.5%. Those are according to your numbers.
Those are correct because they had results out last week, so that's all good. Now, this one's interesting because, remember, we bought them in the hot stocks portfolio.
And we were waiting for a catalyst, the results, namely the results.
Unfortunately, I'm sorry to report that the catalyst was a reverse catalyst.
It's changed your opinion on whether we should be holding them in the hot stocks portfolio.
The problem is that Mutlu Akku was acquired, and that was all good, and there was plenty of opportunity to increase, sales and so on. But unfortunately, it turned out that both Rombat, which is the business in Romania, and Mutlu Akku got a substantial sales profile in Russia, which was terrible because of the collapse of the ruble and all of that stuff going on. So sales were a lot lower than we expected. Also, they mentioned that a specific concern of theirs is that there are going to be a lot of new models introduced to the South African market by Inter Alia, BMW, Toyota, and all the others we mentioned earlier, Ford and so on. Now, that's going to cause them some quite substantial expenses on retooling to manufacture the things they do, which is things like seatbelts and lights and other, consumables within the original
Are
market.
we looking here at a situation where we have to rethink our position in the portfolio? I know that we'll do this in the investment of the day, but just give me a little insight into where your thinking is going.
Theo Luke, the CEO, came on CNBC Africa and painted a very upbeat sort of picture. In his view, it's all on track. They feel fairly comfortable with the levels of debt. They're very happy about the fact that they've externalized the business to a greater extent. They're doing more work on the stop-start battery and manufacturing that and branding it Meta and manufacturing it in Romania and in Turkey. So they're sounding fairly positive. But the fact of the matter is we bought the stock in anticipation of a much higher level of earnings given the expansion of the company.
Hot or not?
It's tricky, look, because in the midst of all of these crummy markets, the stock has really bounced down, then bounced back up again, and then bounced down again. But I think it's going to be a fairly long haul back to the levels of profitability we'd like to see. So I'm going to go with not hot.
Not hot. Not hot. Now, that's going to be interesting for our investment of the day.